for the fiscal year 2026 and issued the new initial estimate for fiscal year 2027. Thank you, Adam, for being here with me. I appreciate it. Thanks for all your work. I'll get started. For fiscal year 2026, the total receipt estimate is $10.22 billion, which represents an increase of $165.9 million or 1.6% relative to the spring estimate, and an additional increase of $204.8 million or 2% relative to the final 2025 receipts. For 2027, the total receipt estimate is $10.133 billion, which represents a decrease of $93.9 million or 0.9% below the newly revised fiscal year 26 estimate. The estimating cycle was marked with modest forecast changes for both economy and state general fund receipts. Most changes to the economic variable forecasts were in the tenths of a percentage change, frequently involving no change to nominal growth, merely shifts across real growth and inflation. For receipts for fiscal year 2025, they exceeded estimates by approximately $130 million. And the first four months of fiscal year 2026 exceeded the estimates by approximately $100 million. The group largely incorporated those margins into our baseline and retained the prospective growth rates similar to those of last spring. The most noteworthy change is the full incorporation of the impacts of the federal tax legislation that was passed over the summer. However, most of those provisions to which Kansas will conform were a continuation of prior policy and accordingly will result in small changes to the state's receipts. So for the economic forecast revisions for calendar year 25, inflation was increased from 2.9% to 3%. Real Kansas GDP was increased from 1.7% to 1.8%, and nominal Kansas GDP was increased from 4.6% to 4.8%. For calendar year 2026, the inflation was increased from 2.5% to 2.8%. Real Kansas GDP was decreased from 2% to 1.9%. And the nominal Kansas GDP was increased from 4.5% to 4.7%. And then for calendar year 2027, inflation was increased from 2.3% to 2.4%. Real Kansas GDP was decreased from 2% to 1.9%, and the nominal Kansas GDP was held steady at 4.3%. So for employment, August jobs in Kansas have declined by 10,300 over the year. This represents a decrease of 0.7%. The majority of the decline is in local government education, and this is really relative to a timing issue in the reporting. So we are assuming that will work itself out with the next reporting cycle. In light of the federal government shutdown, the group was working with one less month, or in some cases, one less quarter of information than typically we work with in the fall estimate. While the labor market has continued to loosen in recent months, the number of job openings in the state continues to exceed the number of unemployed individuals. For agriculture, agricultural producers in the state continue to have widely differing experiences depending on the commodities they produce. The livestock producers continue to benefit from high cattle prices. However, the demand for cattle and high input prices have prevented producers from increasing their herd size. Conversely, most grain prices continue to remain at low levels and input prices remain elevated. However, trade deals in the early fall did bring up some prices from their late summer lows. The group does continue to closely monitor agricultural loans, which have grown in recent years. However, default levels remain low. So for oil and gas, the forecasted levels for energy production are unchanged since the spring estimates, while expected prices are mixed relative to April. Excuse me. The price per barrel of Kansas crude oil was forecasted at 53.5% for fiscal year 2026, up from $52 at the spring estimate and $51.50 for 2027. That's down from $52 at the spring estimate. The price per 1,000 cubic feet of Kansas natural gas was forecasted at $3.10 for 26, unchanged from the spring estimate, and $3.60 for fiscal year 2027, up from $3 in the spring estimate. Kansas production for both oil and gas are expected to continue their long run trend of decline through the entirety of the forecast period. So for manufacturing, the manufacturing outlook for the state is generally stable, but does face some headwind. There are production slowdowns of the Boeing 737 that continue to be the biggest obstacle for the manufacturing sector. However, potential growth of defense manufacturing expenditures, manufacturing infrastructure investments, and strong demand for manufacturing workforce are stabilizing in the field. So for tax policy changes, as always, these estimates that we provide include the impact of current law and its current interpretation. Accordingly, these estimates do incorporate the effects of the federal tax bill passed over the summer, H.R. 1, the One Big Beautiful Bill Act. While many of the more widely discussed provisions, such as deductions for certain tips and overtime pay, will not automatically flow through to Kansas taxpayers, changes to certain business expenditures and depreciation deductions will flow through by way of conformity, as well as some changes to federal tax credits to which Kansas can partially conform. One final note on tax policy is that the group did review our estimates for receipts in light of the formula for future rate reductions provided by 2025 Senate Bill 269. These estimates do not anticipate any rate reductions attributable to that policy within the forecast period. With that, that concludes the consensus revenue estimate remarks. And I, again, just want to thank Adam Proffitt for all of his help and the Division of Budget personnel for putting this together. And always, we want to thank all of the different agencies that help with the numerous different subject matters that we look at and tackle through this. And that would include the Department of Revenue, Agriculture, Commerce, Labor, Pooled Money Investment Board, Insurance Department, people from the oil and gas industry, as well as economists from the University of Kansas, Kansas State University, and Wichita State University, and several other agencies. Adam, do you have any comments?
Thank you, Shirley. I appreciate that. I think you encapsulated the conversation quite nicely. I also appreciate KLRD's partnership with this. As mentioned, this is a group effort. Literally dozens of folks involved throughout the last couple of weeks and several different meetings. You know, we had the main meeting today, but there have been a host of meetings where we discuss a wide variety of economic indicators and a variety of revenue resources, and also the caseload side of the equation. So we talk about the revenues here, but there's the cost side of the equation as well. So I appreciate everybody's input on that. And I think we're going to be passing out a profile here before too long, so we can discuss what some of the impacts are on that. The long and the short is, you know, obviously with the revenue going up a little bit, as Shirley mentioned, it's nominal increases, about the 1.5% range. So well within the margin of error from what we would have experienced in the spring. It's really the cost side where you start to see some changes, but We'll let folks get a handle on the revenue, excuse me, the profile that's being handed out and start to ask questions. With that, time's yours. If you can turn the microphone on as you approach and identify who you're with, please.
Oh, you need me to identify myself? Yes. You mean not everybody knows who I am? I'm famous, you know. John Hanna with the Associated Press since the Jurassic Age. I have a question about these net transfers. Why is that number going up and down like that?
Yeah, so there are a couple of things happening here. First and foremost, the 1.5 mils, there was a 1 mil for the Education Building Fund and a $0.5 million for the State Institution Buildings Fund. Those mills were eliminated for property tax, and they're now being covered with SGF transfers beginning in fiscal 27. That's about $81 million of an increase. Additionally, there was a bill passed a few years ago that was supposed to transfer $55 million every year from the SGF to the Build Kansas Fund. The legislature suspended the vast majority of that transfer in fiscal year 26. So you see a dip in 26 and it comes back in 27. So it's an artificial low base in 26. On top of that, the Campus Restoration Act that was supposed to be funded with an SGF transfer was funded with other sources with the fiscal 26 budget. That comes back online with SGF in fiscal 27. So it's a combination of SGF transfers to cover the building funds and also a decrease in 26 from suspension of transfers.
Have you all considered treating those things as expenditures and not putting them in this report so that I don't have to ask these darn questions every year and get into this level of weediness?
I think that is a conversation for the policymakers on how they're set up.
Hi, Jack Harville with the Topeka Capital Journal. There are modest increases in inflation, wasn't insane, but just wanted to ask why we're expecting increases to inflation in the coming years.
Yeah, so I don't have the inflation numbers in front of me, but we're showing the rate of inflation is anticipated to decrease slightly over the next couple of years. There would still be inflation above the federal open market committee's target rate of 2%. I believe it's 2.8% and then drops to 2.6% and then 2.4%. So still well above the target that the Fed would like to see, but the rate of inflation is coming down.
Limited, Topeka Capital Journal. Can you expand upon the big, beautiful bill impacts? I'm sure there are several, but what are some of the biggest ones impacting the state tax estimates?
Yeah, thank you for the question. So relative to H.R. 1 that was passed, there were some tax provisions. The vast majority of them were below the line, so wouldn't impact Kansas, but there were several that impact Kansas to the tune of about $145 million in fiscal 27. I'll just identify some of the bigger ones. So there's about $85 million for the full expensing of certain business property in fiscal 27. There's about $32 million for full expensing of domestic research and development. Another $7 million for increased limitations on depreciation of property. And then there was about $6 million, $6.5 million for, on the individual side, enhancement of child and dependent tax credit. So there was about a 90-10 split on the larger business provisions that were going to the corporation income side. About 10% went to the individual side. So of the $145 million, about 6.5 for the child care tax credit, the rest on the business side.
John Hanna with AP again. I'm looking at the profile, and line 15 is school finance estimates, and you've got increases in 27, 28, 29, and 30. What are those numbers based on? Are those just an assumption going forward? There's going to be a new formula being written, obviously.
That is correct. Those are just estimates, and those will change with the new formula.
Presumably, yeah.
So those numbers could be a lot higher or, in theory, lower.
So the way we did this was under current law. Shirley mentioned in her opening remarks, we always do everything under current law and make those assumptions. So that formula expires in July 1, 2027. For the sake of simplicity and forward-looking forecasting, since there is no other formula to point to, we assume that current formula continues in the out years. Obviously, that could change when the new formula is written. So you'll see in fiscal 26, we didn't really touch on this, but the forecast for K-12 is actually decreasing by $158 million in the current year. So that resets the base downward by $158 million every year going forward. So over time, that adds up to substantial savings in the out years relative to the previous forecast.
What is that 158, nearly $159 million? Why is it dropping? Just fewer
Largely
students?
attributable to 10,000 fewer students at the September 20th count relative to the previous forecast.
And then the other thing is, I'm wondering if you could comment, it looks like from this profile, we go from an actual ending balance for fiscal year 25 of $2.9 billion, all the way down to fiscal 30, a little less than $1.2 billion. So the stability in this budget picture depends upon the fact that we had a huge ending balance. We're eating into the ending balance, not that we've never done that before, but.
Take this one if you don't mind. Yeah, John, you're absolutely right. And when I look at these, and this is Adam Proffitt's personal comments, not the consensus revenue estimating group, I want to make sure I'm clear on that. So you're referencing line 20, where it shows the degradation of the ending balance being cut by more than half. As I look at this and as we look through profiles and build budgets, we don't just look at the ending balance. More importantly is if you slide your eyes down to the very bottom line, row 23, that's the receipts above or below expenditures. So are we spending more than we're taking in, or have we cut revenues so low that we can't cover the basic operating expenditures? And you're right, the ending balance is going down because the receipts are below expenditures to the tune of $367 million in fiscal 27, $302 million in fiscal 28, so on and so forth. Now, when the budget bill was passed last year, based on the forecasts that were available at the time, that number was closer to $700 million per year of an overspend. So clearly the gap has been closed relative to the April forecast, but that's largely attributable to the decrease in costs on K-12. As I mentioned, it's down about $160 million. You carry that forward 5 years, that's a sizable decrease. But yes, the short answer is we're still exceeding the revenues with the expenditures in here on a forecasted basis.
So the ending balance, the previously projected budget hole, had been projected to hit by the end of fiscal year 2029. Do you have a farther out projection than this currently that shows the ending balance going into the red?
We do not. That's just the profile here is through fiscal 30. It's about as far out as we have right now. We might go through fiscal 31 at some point, but you start getting so far out, and it's, assumptions on assumptions. And again, again, Adam Proffitt's personal comments, what we look at is the revenues versus expenditures. If you have too many years in a row, it doesn't matter what the surplus is. At some point, that goes away.
Looking at the current budget profile compared to the one put out back in April, are you feeling more comfortable than you were before about the budget balance or stability?
Yeah, I guess, again, answering for myself here, and Shirley, feel free to cut me off. I think the state's in relatively good shape, right? There have been a lot of job growth, a lot of things happening in the state. Revenues are increasing, about 1.5%, as mentioned. You're never going to find me comfortable in a situation where we're overspending by $300 million every single year. I'm happy, obviously, that things are in better shape in the out years. We've got about $1 billion, but that's due largely to the decrease in the cost for K-12 and also an increase in the FMAP, the federal share for the Medicaid program, that's carrying forward. So the gap has closed, but it's largely to factors that are outside of our control right now.
I know that the two of you up here are not the policymakers, the lawmakers, but would you have any recommendations for how to address the $300 million gap in receipts and expenditures?
I'll be having conversations with the governor to start building the budget at the first part of December. I think making sure that our revenues are sustainable over time and that we're able to meet the needs of Kansans and the programs that we offer Kansans is going to be paramount.
Well, and I'll just reiterate what many of the legislators said last year is we have to look at expenditures and make sure that they stay equal to or below the revenue stream.
On the revenue side, was there any look at quantifying the impact of tariffs on the state revenue?
Tariffs has been a big discussion in terms of quantifying and putting a dollar amount behind them. The short answer is no. Obviously there's been shifting policy, shifting levels, but we discuss it, and it's more a broad-based discussion in the aggregate when as it relates to inflation and sales and profits and everything. So there's not a specific number we can provide for tariffs itself as it relates to the revenues, but it is a consideration that was discussed.
All right, well, thank you very much, and the meeting's adjourned.